And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Right. Good afternoon, traders. Welcome to the market recap. Tuesday, February 1st. February 1st. I'm John. Thanks for trusting me with your time. Of course, it's been a heck of a trading day today. Equities just continue to push this market. The market's higher and higher. We've got what looks to be 3 days in a row of late spikes. It's just, I don't know if I've seen that before, but boy, we're certainly seeing a lot of initiative buying coming in. Whether they're too shorts or new longs is yet to see. Be very interested to see tomorrow if the open interest increases in the equities in the S&Ps and the Nasdaq. I know this morning we had a pretty good drop in equities, well, at least in the S&Ps as far as open interest is concerned. I'm going to see if we see some new buying coming into this market. As always, I'm hoping that things went well for you today. We had the session for Top Step Trading Foundations today on Market Profile. Hopefully, if you were there, you found something out that you didn't know, something you're going to be able to use moving forward. Of course, you're going to be able to see that, the recording, on our YouTube channel. And wow, what a day. Just kind of going over what the markets did today. Crude oil was a pretty volatile, wild day. I mean, it's been range bound for a few days, and it really spanned both of those extremes. If you were listening to the repair day, perhaps, or you're just kind of trading the range-bound strategy, you probably really had a pretty decent day in crude oil. S&Ps and the Nasdaq buyers remain in control, be they getting out of shorts or new longs coming in. We've got a third day of late spikes. It's going to be another interesting session for us tomorrow. The gold, we got a new channel, or as we've now started to call them, Daniels, forming in gold that might offer some opportunities moving forward. The euro value continues higher as the dollar kind of comes off a little bit. The 10-year overnight lows keep value in. Overnight longs, I should say, keep value in balance. We had a lot of overnight longs in that 10-year last night. They capitulated through settlement and then created balance, very similar to yesterday's value in the nat gas. We're starting to form a little bit of balance just below weekly kickoff high. As always, we're going to be focusing tomorrow morning. Tomorrow's Wednesday. Wednesday, we do have some information as far as employment is coming. The rest of the week, really, is the focus is going to be on unemployment and employment. The ADP employment comes out tomorrow at 7:15. Early tomorrow, and then of course the petroleum status report. We get jobless claims on Thursday at 7:30 Central, and employment situation, the unemployment numbers, of course, on Friday at 7:30 also. We've got API this afternoon. We've got some earnings coming out here. We've been waiting for Starbucks. We've been waiting for General Motors. Don't see them listed here yet. There were some reports Google was going to be coming out today. I don't see that that's on the top of my list here, but still waiting for some of our afternoon earnings to come out. It's a pretty long list, but we'll just keep an eye on that as we go through the recap here. Good afternoon, Jeff Martin. Good afternoon, Equanimous, from the land where guitars live in trees. Yeah, I used to pick up like old beat up guitars and just hang them in the trees, and it was a lot of fun. Good afternoon, Vince. Good afternoon from the land of Caleb Williams. That is, but time for a beer. Spencer, sounds like a good idea. George, I lost a whole 4 ticks worth of P&L today. I call that a winning day. Yes, sir, absolutely. Good risk management, of course. Norman, good afternoon. Sarah, good greetings to you as well. PD Legend, today sucked. Sorry that you had a tough day. PD, hopefully you're ready to play tomorrow. Make sure you review what you might have missed today, and be ready for tomorrow, of course. Google out. All right, we'll see what happens here. I don't see it just yet, but we'll take a look. But good afternoon to you also, Michael. Auto, past 2 days have been very difficult for me. Can't seem to make good trades. There's been a change in the marketplace, right? We were volatile to the downside. We last week spent all week in a kind of a range-bound, volatile period. Now the market's heading back up. It's difficult to make the changes as soon as we kind of recognize them in the marketplace. We always want to go back to the things that have been working, and when things change in the market, the things that have been working don't necessarily work anymore. It's very difficult to try and do that. Market state changes strip people's gears, strips my gears sometimes. But to make sure you be creative and try to adjust to these things. Crude has been so much easier to trade. Michael H. saying, Ricardo, good afternoon. Auto, NQ is the only product I've looked at for the past 11 months straight. I'd rather just wait for it to improve. Yeah, well, the thing about markets is they are all the same thing to a degree. There are different reasons for them to move, but when it comes to the bottom of it, they're just never-ending two-sided auction processes that occur in multiple time frames. That's simple, right? That easy? No, not easy, of course, but when it comes to the market profile, recognizable things are the same, whether it's crude oil or the S&Ps, or and sometimes they'll kind of let you transfer skills between products. Not easy, of course. Nothing is at this. Ricardo. Galen, good to see you. Dr. VJ. Robert S., good afternoon to you. Frederico, good morning, good afternoon. Started very well today, gave it back. Don't know how to trade the market when it just rallies slowly. The grind is so difficult. Sarah, hey John, I have been reading in the Trading in the Zone. For anybody who needs work on the psychology, it's been so helpful for me. It's a great book. Those Mark Douglas books, Trading in the Zone and The Disciplined Trader, are definitely books worth reading at least 4 times. Yes, markets are cyclical. Good afternoon, Kyle and Giuliano. Hello to you as well. I got Lacey here bugging me, so I gotta give her a little bit of a pet. Hi, Lacey. Good girl. You big animal. All right. Well, let's go ahead and, let's see what the news has to say. A lot of just talk about earnings that are due out any minute. I don't see anything that was actually really kind of market moving. Nothing tremendous. I don't really see all that much that impresses me here. All right, so we've got some earnings out here. Starbucks misses on earnings per share, but revenues were good. General Motors earnings per share was good. Revenue is a pretty good miss. Still, Google out, beating expectations on both earnings per share and revenue. Let's see what it's got to look pretty good for the Nasdaq here, as well as the S&Ps. Both of them kind of finishing the day on their highs. Boy, that Google just killing it on both. I mean, really just blowing things out of the water with those returns. Oh my goodness. All right. Well, why don't we go ahead and jump into the charts and let's see what we see. Okay. Crude. Talking about range bound, OPEC info, in doubt. They were talking about perhaps a situation where they're expecting to have 1 million barrels per day too much. I don't see how they can do that. They're meeting the end of this week. We'll see what they have to say after that. Probably just want to cut production so they can keep prices moving higher. So we're still range bound. Look at the 30-minute chart. What a kind of a very, very, I would imagine, a difficult, but at the same time, relatively easy day. I mean, here's Friday's range. Friday's range was largely the previous day's range and the previous day's and the previous day's range. We keep expanding that, but boy, the volatility in this range is really kind of amazing. Initially the opening range was the high of the session, provided a 60 tick move to the downside, right down to the low end of the range. And when we're in range trade, we are looking to fade the extremes. If we were able to fade this extreme, we got to the other extreme within a couple of hours, and then another opportunity for us to fade the extreme. In other words, to look for a sell against the recent highs. Range bound trade, we trade the range, and another move back towards the center of the all over range. We're gonna have to see what happens with the API and EIA tomorrow to see if there's any impetus for us to bust out of this range. Remember, range bound trade, we fade the extremes. On breakouts, we go with any breakouts that are accepted outside of range. Let's see how the S&Ps are faring now. Late spike, late spike, late spike, late spike, late spike. This market seems to be going back to its old ways of getting short time frame traders short and then running it up on them. Yesterday we lost over 50,000 in open interest on lower volume, but the market continued to move higher. This was a short covering rally yesterday. Today, if we see an increase in open interest, this is new business, new buying coming in, and that's going to be encouraging for continuation to the upside. We've got weekly kickoff high, which is 45.72, right in our sights. Look at the 30. I mean, it's almost just like we did yesterday, but a little bit deeper. I'm going to put the profile on here. So yesterday we opened, we had an auction to the downside first that did not succeed, and then we continued to push the market higher and into a late spike. This morning we opened, we looked below the base of the late spike. We had a chance of continuation to the downside, but on the TPO chart, 131. Let me unsplit. So here's really where the base of the late spike was. Here's where TPO value high was, right here. So the market opened, drove into, had a chance of accepting value from yesterday, but we never did see a 30-minute bar close inside of value from yesterday. Couldn't quite get to the point of control from yesterday. That's important information. We left yesterday's area of value relatively early in the session today. The market continued to rotate higher, rotate higher, rotate higher. Finally, we got another late spike to the upside here. So tomorrow it's going to be largely the same thing. We've got a day that really, without that late spike, would look like a short covering day. Did we try and get short again, and did we get run over? We'd be very interested again to see if open interest tomorrow is an increase. Let's go back to the 30 here briefly. So while this looks like, value high is right at the high, that's the volume value high. TPO value high was much lower, and we never did see the market get into and accept value from yesterday. We didn't really open with a gap anyway, but the rejected TPO value ground higher throughout the rest of the day, and then pop right at the end of the day. We got our late spike. I mean, there's only so much you are going to be able to do about that. Here's the Nasdaq, really similar situation, an even deeper move into the TPO value area. Then here's our late spike. If you remember, I put that red line at the base of the late spike. The market opened, drove right into, didn't really get a close, I don't think, inside TPO value. Let's take a look. Okay, here we go. So here's TPO value high, volume value high, not too far off of that in the Nasdaq. The market opens, does trade to the point of control, which was right here, I believe. So we did make it in the Nasdaq, but again, we rejected value, pushed price higher, rotating higher, and now we got another late spike. It's going to be another interesting day tomorrow. I love when there is good, solid reference. And I consider that good, solid reference or nuance in the Nasdaq and the S&Ps to be that late spike. It really can bring you some decent opportunities, and that's what we're here for, right? So we had volume and open interest really kind of dry up over the last couple of days after this breakout. We didn't really find any new business down there, and the market seems to be trying to attempt to return back to upside movement. Here's the 30-minute chart, and we've got our channel, or as we like to call them here on the Market Recap, the Dan'l, in honor of Dan, who, by the way, says hello, and he misses you. So here we go. We got a naked point of control left here, one left down here as well. We really got visual references all over the place. I'm more interested in seeing if we can come up and fill this gap. And if we just through attrition stay inside this channel, that could happen maybe by the end of the week. But of course, we're going to see. The thing Dan likes about these channels is reference. We get to the top of the channel, we look to sell. If it breaks out, we go with it. If we get to the bottom of the channel, we look to buy. If it breaks out, we go with it. Could this be? Might it be? Could it be a bear flag? Yikes. Lions and tigers and bears. Oh my. You have to wait and see. Euro. We had a pretty decent bump in volume yesterday and an increase in open interest in the opposite direction. The market broke out to the downside. We had one good day of volume, and then volume started to shut off. Now we see the market kind of returning back to and trading to pretty much a previous weekly kickoff level here. We were looking at that this morning. Take a look at the 30. There's our gap that we filled yesterday. Today, opening, really just kind of digesting the new area here, it seems. But again, our overnight high really relatively close to that previous weekly kickoff support level. Will it end up being resistance? We got some reference down below here in the naked points of control, but tons up above. Oodles, as they say, of visuals, and that's an industry term, oodles. Here's the 10-year, really just centrally located, weekly kickoff high to low, last week's range high to low. Really kind of nervous about trying to find good opportunities here, and we're looking at short time frame levels with which to find those levels. Here's the 30. Okay, short time frame level here, naked point of control. That was prior to the open. Settlement was here, if you remember, at 127.31. We had some pretty substantial overnight longs. Once with the market, even before the market opened, it started to come off of its highs. The overnight inventory really kind of began right about here. By the time we got done with about the first hour and a half of trade today, we had unraveled that and just started to create value where value already was. Value, value, value. No change really in the perception of value in the 10-year for the last 4 sessions, even though we've seen some pretty decent moves. And that guess. More indecision. What? You will be waiting for Thursday for the nat gas release? Take a look at the 30. Pretty much a normal trading day. The breakout above was really after the close, a normal trading day. We've seen a couple of those. Nope, not quite. It looks like we extended above the initial balance, and that's it. No normal trading day, but no real big shakes for this day either. Nothing tremendous. So we do have some markets that are providing some really decent opportunities, and we will be looking forward to seeing those again tomorrow. Tomorrow morning as the middle of the week comes our way. Again, we're looking for ADP employment numbers are pretty much the largest number for us to be thinking tomorrow, and that's at 7:15. And those early numbers just get you. Talking about nat gas, Vince says the markets are giving gas to him. And you are hanging tough, Vince. You are hanging tough. Spencer, looks like a lot of stops got blown up during that spike just from watching the dome move. Of course, that's usually the spark that lights the fire, and then everybody else decides they're going to have to jump in and either cover their shorts or try and get long. This day in history, in 1884, on February 1st, the first portion of the Oxford Dictionary is released. There's a big argument as to whether the Oxford comma should continue to be used. I'm personally a fan of it. 2000. Let's see here. 2004, today was the Super Bowl with the famous dance by Janet Jackson and Justin Timberlake. God, that's 18 years. Oh my God, time flies. Time flies. 1790, the first session of the U.S. Supreme Court opens. 1968, Richard Nixon announces his candidacy for president. 2003, Space Shuttle Columbia breaks up while entering the atmosphere over Texas. It's a sad day. Let's see what happened in music. 1964, the Beatles started a 7-week run at number one with the U.S. singles chart, I Want to Hold Your Hand. It was number one in the UK first. 1937, Don Everly of the Everly Brothers was born today. 1937, Ray Sawyer. I can give you a Top Step Trader hat if you're telling me, you guys can Google that. He was in the band Dr. Hook and the Medicine Show. They did the song, The Cover of the Rolling Stone. 1948, Rick James was born. The Super Freak. 1968, today is Lisa Marie Presley's birthday. Neil Sedaka has a number one hit, Laughter in the Rain, over 12 years after his last chart topper. Breaking up is hard to do. Neil Sedaka. Give some of you younger people a while to find that one. And in 1980, Berlandi released Call Me. Peaked at number one for 6 weeks. Kind of a end era of disco. I liked the song, and you had to like Blondie. Wow, I used to play this song in a band. 2013, Coldplay's Clocks topped a list by the BBC Radio 6 Music's top 100 tracks of the past 10 years. I don't know if it was that good a song. Well, anyways. Right. All right. Well, I've been yammering pretty near a half an hour now. I'm going to go ahead and relax and have a good evening and get some good rest and be ready for tomorrow. It promises to be another fascinating and challenging trading day, aren't they all? Go take care of yourself, take care of each other, be good to yourself and others. Wash your hands, say a prayer for peace. I'll see you tomorrow morning on the market forecast, 7:45 a.m. Central. Have a good night.